Good morning, everyone. I'm your host, Ryan Rosbiani. Welcome to Markets Simplified on Place Your Trades Network. We're the network that focuses on trading daily options using CME Group's event contracts to trade indexes, metals, energy, and Bitcoin future markets. Today's broadcast is brought to you by Tradeovate, which has built the custom app dedicated to trading event contracts, which is what we use here at Place Your Trades. So, welcome again. This is episode 2. I'm very excited to welcome you all to the show, Markets Simplified. I'm not a financial advisor. This is all meant for education purposes only, and we're here to have fun, learn, and of course, most importantly, discuss so I can teach you guys how to use these really cool event contracts that are kind of a less riskier way, in my personal opinion, of trading the world of options. But first, our show's format, for those of you who are new to the show, is market overview, today's price action, and then we go into the world of event contracts. And the whole big goal that I have for the show is to also try to teach you guys some educational stuff throughout the process of charting. So for market overview, I'm going to keep it very simple. We have Jerome Powell. We had, of course, in the morning, we had initial jobless claims come out. That came up from last week to this week flat. Essentially, the number was estimated to come in a little bit lower, but it came in exactly, sniped it right at the same point, flat again. So, and markets really didn't react too crazy to that. It was a one or two candle reaction. In the past, we'd have a multiple candle reaction, and it could even affect the whole day. We got lucky, didn't matter. Fed Chair member Jerome Powell is speaking to the Senate today for the monetary policy semi-annual testimony that he has. And there's some few important key things that he said that I kind of took note of here that I want to share with you guys because a lot of it was a repeat. But the most important things that Jerome Powell said today was essentially that there might be a room for a soft landing. That's one thing there. For folks who are wondering what a soft landing is, it means that the markets aren't going to crash. It's not going to be a massive recession. It won't be too crazy, even though we had some big jumps. He also mentioned that there's room and it might be appropriate to raise rates 2 more times this year. As we discussed in our last episode, which is the FOMC fallout, we discussed how the Fed put in their dot plot that there could be an additional 2 rate hikes. Jerome Powell saying that it could be appropriate to do these 2 rate hikes this year. And he said that the committee is focusing very strongly and they feel it very strongly about having further rate hikes, but they're going to be, again, focusing data driven. It's going to be data driven. And we discussed it last week as well. The big focus is going to obviously, in my opinion, be the core CPE and PCI. And next week on Friday, we'll be getting the core PCE data. So that's going to be playing a big role. He also said it would be perfect, but no guarantee that the labor market can get into a better balance without unemployment rising. If you guys remember, he's always been focused on a softer labor market, which means beating the heck out of the labor market a little bit. But it seems like now he's saying that, hey, labor market could be a little bit softer. Things don't have to be too crazy. And we can get to the point where things kind of calm and cool down. So that's very exciting news for me personally, kind of looking at how things are going. So I'm going to share my screen real quick to give you guys a little bit of a market overview of what's going on with the overall market. So I'm going to take you guys to SPY, and then we'll come to our event contracts and discuss all that good stuff there. Let me just, I'm going to turn off everything so we kind of have a naked raw chart so we can kind of take a look at what's going on in the overview. So again, this morning we had a bit of a gap down, more than a bit of a gap down. It was a legitimate gap down, and the gap filled almost right away around 10 a.m. We came down, gap played a little bit ball here and kind of filled the gap here into the end of the day. And then yesterday's gap fully filled, and then today we had a small little gap which filled almost instantaneously. If I turn on extended hours, you'll probably be able to see it a little bit better as to what happened. We kind of came down into the pre-market, gap was created, and then the gap kind of filled up as the day went on. And the day really started because Jerome Powell's comments were somewhat bullish. Hey, we don't have to beat up the labor markets and markets like that. But if you're looking at some of the levels that I have drawn here, these are the levels that I'm personally watching and kind of discussing with myself, my team, and everything that I'm doing. These are the levels that I'm kind of watching very closely because as we saw, we were in a falling wedge here. Falling wedge didn't play out. This is supposed to be a bullish pattern, but as we know that sometimes these patterns don't play out. Sometimes they just don't hit. So we can see here that this situation kind of fell down here. And overall, the markets are sort of kind of like flat. We can look at the NASDAQ as well, the QQQ parallel. We can see it's very parallel to the situation. Tech markets are doing a little bit better with everything that's going on. Tech is actually doing decently better. I'm just want to give you guys an overview of the sector. I think the financials are lagging a little bit. The financial markets are lagging a little bit. XLF is lagging, and so is energy. XLF and energy are lagging. Real estate is lagging. Tech is green today, and so is healthcare. But if financials were green, we'd probably see SPY markets move much better. Tech is really moving, and we can see that parallel here in QQQ. for the kind of the overview of what's going next. Let's discuss some of the price action today. Some of the stocks that are going a little bit wild. I want to prepare you for them because one thing to note is that as the S&P 500 SPY is made up of a lot of large stocks, and you guys have probably heard of this past few weeks, the big seven: Apple, Google, Microsoft, Amazon, Tesla, Nvidia, and Google L and Google G. So those two both kind of count as part of the big seven, unless I'm missing one. But these guys have been really moving the market. So I want to really quickly kind of show you Tesla went on a rampage. They kind of got downgraded last night, and these saw some of the price action kind of give away. But then this morning, like we opened up down here, you can see the wick here. You can see the markets if you want to see. All right, here it says tells you where we opened. We opened at 250, but then the markets raged all the way up and even closed this candle at 261. So that's a massive move within 1 hour. And that's pretty cool. Like we saw it coming back. There's been a lot of price strength there because of their deals with Ford, with GM. There's rumors of their deal with Hyundai, discussions of building and opening up a gigafactory in India. Even Elon Musk went out there. Discussions of FSD in China. That's a rumor. So there's a lot of stuff that's happening positively for Tesla. And the funny part is, if we look at Tesla just a few months ago, we can see here that Tesla was sitting just last in April at the 150 point, and we're almost at we're at the 260 point right now. So it's a nice $100 move there. Ignore the fibs; they are older. They haven't been updated here on this platform. That's that. Apple's also having an interesting day itself. And kind of doing its thing. Apple's on a rampage, trying to get back to that $3 trillion market cap that we saw last year, but it's been having a little bit of trouble getting over the hunch of that 187. 187 has been kind of the iron sight blocker for this thing. It's not letting her move, not letting her operate. It's kind of like, hey, we're not going anywhere just yet. I do want to pull up the financial markets really quickly because the banks are being significantly discussed, and we see that the financials are lagging significantly, and you can see that those guys are still getting beat up because there's still a lot of talks about mid-sized and small-sized banks having some troubles. The bigger banks are actually kind of taking advantage of the situation and liking it. I hope you guys had your coffee this morning. Get energized. Not a sponsor. So yeah, that's kind of our price action for today across the stocks. I want to take you guys now to ES. So you guys know, for our event-based contracts that revolve around the futures markets, which is ES, is what we use here at good old Trade of Eight. As you can see here, there's a lot of stuff you can kind of go through and kind of trade. You have the S&P 500, the Nasdaq, the Dow Jones. You've got good old oil. I know there's a lot of oil heads out there. Gold bugs we got you covered as well. The Russell 2000, the Euros. So there's a lot of optionalities for anyone who wants to do this. And the cool thing about this is, in my personal opinion, and all of this is my opinion, is this is a much less riskier way in terms of capital for trading your options and trading the world of options. You're kind of getting your feet wet in the world of options. So let's go and do some charting with ES, and then we'll come back to the event-based contracts, and I'll explain to you exactly how I plan to use them as soon as everything goes through in my account. And I'm going to take you here. So taking a look at ES, this is the daily chart. This isn't going to help us right now. Again, the thing about the event-based contracts, there are 0 DTE, which is you have to trade them the day of. What does that mean? You get 1 day to activate your position at the open. You can purchase and kind of get going, and then as the markets close, those contracts are nullified as well, and I'll discuss the specifics with you. But the reason we're staying away from this big macro view right now, we can take a look at it from time to time, and we'll cycle to it if you want to do it. But really, it's a day trader's game here, and I think that it's a very good way for people to get their feet wet in the day trading market, because there's a lot of built-in protection, in my opinion, that can help you. So let's turn on my indicators, because I'm an indicator junkie. I like to have my indicators on. I like to make sure I have everything I need kind of guiding my path. What I personally use is the 90 MA, the 20 MA, the 50 MA, and the 200 MA. The 200 MA I've turned off because it's so far below. Well, we're on the hour chart, so it's not that far below. But you can see here that the 200 MA is kind of acting as our support, with the 90 MA trying to build support here on the last 3 candles. And it's holding decently well. But we've been kind of stuck between this range for the past 3 hours. Hourly chart, each candle is an hour. We've been stuck between 4403.50 and 4100.50. So we've been stuck within the $7 range here. Kind of peeked our head out a little bit here up top here, and kind of with this candle, but it wicked down. The sellers came in, said, nobody, not today, not yet, kind of smacked her back down. But it's kind of operating. So I'm going to extend my trend line. So I posted this on my Twitter as well. I like to make my plans every single night beforehand, and in the morning I'll update them, and I'll run it again, and throughout the day I'll update it as well. So you can see here, we kind of, from this resistance trend line here, I'll change the color on it real quickly to, let's go dark blue. That's one of the biggest troubles I have, honestly, is sometimes picking the color of these trend lines because I don't want to get confused with my indicators, and there's only a limited amount of colors, but that's not important. So we broke out of this resistance trend line very beautifully, and it kind of popped up, but we can see here it's having the resistance play between the 50 MA, which is at 44.16, and 44.10.50. This range right here is playing as resistance. This range of 44.03 is playing as support, and we're going to be watching it throughout the day. And we know that we have some decent support on the 200 MA, which is at 4400. So 4400. So we're going to come back in a second to this. I want to explain to you guys the event contracts and how those work. So let's say you sign up, you're in, you're ready to play, you want to jam with us. You come to this page, ec.tradedebate.com. You go to the markets, you click on what you want. So let's say you're like me, you like to do the futures. I like to use the futures markets to see where SPY is going overnight, and this is kind of a really cool tool that you can see. It gives you the chart, real live data. I know a lot of places don't give you live data on futures for free. These guys do. They're great. You click the strike list and you get met with this page right here. Now, for starters, I need to zoom in so you guys can see this a little bit more clear, and I zoomed in a little too far, and that's on me, but that's okay. So how an event-based contract works is, unlike an option, this isn't multiplied by a factor of 100. This is just flat. You see $1, it's $1. You see $8, it's $8. It's not multiplied by a factor of 100. So right off the bat, you've minimized the leverage aspect that options have by a lot, because you're really not putting in too much. The most you can spend, as you can see, our most expensive contract is at 1975, which you're really not going to touch. These are deep in the money right now. And then you have your contracts kind of get cheaper as you go farther out of the money. So as we discussed, right now the futures market ES is at 4406, which you can see up here at all times. Again, live data, it's updating live. We are above the 4400 number. So this is kind of like your first out the money strike is here at 4410. And what you're saying is, if you click on yes to purchase, you're saying, yes, I believe that ES will close above 4410. And if you click no, I don't believe that ES is going to close over 4410, that's what you're betting. So what that means is, if you think ES is going to close over 4410, so let's say you're here, you're looking at 4410, you feel bullish, even though you see some resistance here, something implores you to say, hey, I'm going to come in. I believe we're going to close over 4410, and anything over 4410, even if it's 4410.0001, you win. You get the event-based contract win. So you click yes on here, and you can make your purchase. But let's say you think, no, I don't think we're going to close over 4410. I think that the resistance is too strong. I don't believe in it. I don't think it's powerful enough. I don't think we're going to get there. So you come here and you click no. You say, no, I don't think it's going to happen. You click on no, you make the purchase of no. And the thing here is, if you close over, it's a guaranteed win of 20 bucks. Now, the thing is, throughout the day, at any time, as these prices fluctuate, as you can see, the event-based contracts prices will fluctuate as the markets move as well. As you go up, as the variability of something becoming more and more viable to happen, you can see that the value of the contract will go up. And as it becomes farther away from it not happening, you can see the value will come down. Throughout the day, at any time, you can choose to sell this contract and take profits, or cut your losses if you want. If you're unfortunately on the wrong end of a trade, you have the ability to kind of do both here. And that's the fun part about this situation, is that your risk is capped in playing these futures markets to what you're putting in. So let's say you bought this contract, you're saying over 4410, and let's say we bought it at 875, your risk is maxed at $8.75 per contract. And your maximum, if this happens, is 20 bucks. So you kind of have, you already know your risk reward ratio played in, same way as we do regular contracts in the real world. And then also the opposite side you can do is, you can also do straddles on this. So you can kind of balance it out. Let's say you're very bullish, and you're like, we're definitely going to get over 4410. So you buy 10 of these contracts, and they're like, let me hedge my bets a little bit. You buy like 3 of these no contracts, just kind of like balance yourself out. And throughout the day, you can always cut the leg that's losing, and if you wait till the end of the day, you'll obviously, the contracts, the leg that was correct, will pay you out the full 20 per contract. So that's kind of like the world of event contracts for you. They're really cool. They're a very fun tool. And as soon as my account is approved, I'm going to be definitely playing these with you guys live. So let's go. Let's run a hypothetical. Let's run a paper trade about how I would deal with today's event-based contracts and what I would be purchasing if my account was live. So looking at ES again, we're going to look at it very closely. We're going to go on the hourly chart, and then I'm going to take you to the daily chart. And again, remember, these are day trades. These expire at the end of the day. So we're going to be focusing on what's happening today. So right off the bat, we were discussing earlier that I believe strongly that we're probably going to close over 4,400 because of this 200 MA holding us very, very well, or 200 simple moving average. Let me actually turn on the EMA, see where the EMA is sitting right under this 40. EMA's right down here. So it lines up with this actual support level that I've drawn. So I'm just going to turn it off, kind of minimize noise as much as possible. I can already see here that we're approaching 4410. So like, let's see here. So we got the 4400 situation here. We've got good support building around here at the 4404 and the 4403. So again, if you guys are curious, my indicators values are up here, 4403, and we're at 4409. So again, we can see that the bulls are pushing. You're building a nice little kind of a support level here. But again, what's kind of keeping me a little bit hesitant about this 4410 number closing over it is the fact that we have these big top wicks, and top wicks signal selling pressure. So looking at this right off the bat, I would be hesitant. I would be, if I was kind of doing, if I wanted to play the kind of like the gambler's mentality about this, I want to take like a, what do you call it, a lotto. The terminology we use in the world of the stock market is a lotto. I would say yes, we're going to close over 4410. I'd buy one of those, and then I'd straddle it with a no as well. So I'd have kind of like a balanced play, right? Balanced play. But I want to take a look at the macro view for a second of what's going on here within ES to kind of see where we're going in possibilities at the end of the day. Just like we're looking at like 3 individual hours of the day, but I want to know what's going on full in the world of ES. I'm going to turn off my drawings for a second so we kind of can get this naked contract have you, and you can see here that ES came down to the 9 EMA. Sorry for all the jumps. Here we go, jumping back and forth from air intervals because I wanted to kind of like get into the treat this as real as possible, right? We're not just throwing money into the wind. We want to treat this as real as possible. This is our event contract. This is important to us. We can see here that the 9 EMA held us, which was at 43.97, which is very parallel to that level that we had. I showed you guys earlier, which was at the 200 EMA. So that is kind of like the wall, the support that I'm watching, and we can see here that our volume wall, it's kind of holding us there too. So that's kind of good. That's good news there for that part. So over 4,400 is kind of almost in my play in the back of my head. It's very, very good, and I like it very, very much. So now going back to the hourly, kind of like we're playing the game, right? We're in real time. You guys are seeing in real time how my brain's working, how I'm cycling through everything that's going on to kind of get my game plan going. I see the selling pressures coming in. The buyers are coming in and pushing this up. We're getting decent volume here, but volume of course throughout the day is going to die off a little bit. So if I was to kind of make, and we know that the other thing to keep in the back of our heads, we were discussing the macro, right? So we have Jerome Powell speaking. Once he finishes speaking, we saw yesterday, markets popped as soon as he finished speaking yesterday. So we keep that in the back of our heads. He's been very kind. A new comment came out, which I can read to you guys. My forecasts are very similar to the committee's forecast. Powell's strong majority of the committee believes 2 more rate hikes before the end of the year. So he's kind of hammering on the 2 more rate hikes, which markets are sort of expecting, but really not discussing as much as they would. It's going to be the big main topic throughout the rest of the day, which could cause some chaos, a little bit of chaos. So how I would kind of play it is, I would say personally, I'd be more comfortable saying no. We don't close over 44.10 today because of what's going on here, because of the macro view, because I'm seeing the resistance pressure here. I would go with 2 no's on this one. I'd go with 2 no's, and then I'd hedge it with 1 yes. So I'm going into the situation with like a $33 kind of trade situation. So I'm kind of going a 2-to-1 no to yes, just because of I'm not seeing too much confidence right now. The financial side is kind of there. The tech markets are kind of, I can refresh and kind of take a look at what the tech markets are doing. Um, the tech markets are sorry. The tech markets are still holding up very well. The tech markets are doing good actually, so that could send SPY actually a little bit higher. So we have to actually reassess what we just said. Let's reassess. The financials are still bleeding. The financials aren't doing good. So but we know the tech is leading, right? The top 7 are leading. So this is what I'll do. Let's do this. Let's reassess. Now that we know the tech markets are doing better, Powell's comments aren't really mattering too much. And if you kind of zoom out here, you can see that we broke out of one resistance trend line, the blue one. I'm breaking out of the yellow one, and we're kind of testing this 44.10.50. So, okay, so let's go with, actually, let's see where this is here. Okay. And then this is at 44.13.50. Okay, and then you got the 44.16 here at the, so we're definitely, so this is, I don't think we're going to close over 44.16, right? So I don't think we're going to, so I go with the 44.16. I would go with a no on the 44.16 right here, right? So kind of like, actually, excuse me, the 44.10, I'd go with no as kind of my hedge basis here. With one, I'd go with one no there. Again, we're trying to keep it simplified to 3 contracts, and we're hedging as well at the same time, just because I want to kind of get you guys in the mindset of kind of protecting your assets as well. I'd go with no of the 44.10. I'd go with the same plan as before. 2 no's and 1 yes. So we'd be hedging 2 no's to 1 yes right off the bat. That's the trade I would lock in right there. Boom, like 34 bucks. And then what happens throughout the day is, as I'm watching this situation, if I see us lose this 9 EMA, I would cut the loss on the yes, right? So what I'm actually gonna do is I'm gonna write this down. So we're gonna kind of treat it like an actual paper trade. So let's say we're locking in right now. So let's say we bought 1 yes for 9 bucks, okay? And then we bought 2 no's, and this is the 44.10 contract for 11.50. Okay, so we got 2 yes and 1 no. So we're locking in this, and let me calculate what that whole thing would come out to be. 11.5 times 2 plus 9. So that's a $32 cost basis that we're putting in. And our maximum victory, if we get the 2 no's of yes, that would put us at 40 bucks. And if our yes comes in, that would put us at 20 bucks. So technically, we're risking $12 here, because what happens is if our hedge comes in correctly, it'll offset our, remember, we're putting in 32. If we get yes correct, we win 20 bucks. So we lose only 12. If our no's both come in correctly, well, we lose $9, right? We win 40, and we've only lost 9. So technically we come in with a $31 31 win. Actually, let me just recalculate that. I don't want to mess it up. 20 minus 11.50 times 2, so that's 17 right there. And then we subtract our $9 cost base, so we'd win 8 bucks. Actually, excuse my math right there. So you'd net 8. You'd net an 8 profit, so you'd come out 40 divided by, let's do 40 divided by 32. We'd come in with a 25% victory if that comes in correct on the no side. And if we come in with and if we were wrong, we do close over 41.10, we only lose 12. We only lose our initial cost basis. We only lose 12 bucks, because we win the 20 from the yes hedge, and we lose, our whole initial cost basis was 32, so 32 minus 20 is 12. So if we were wrong and we don't close, and we close over 41.10, we win 12. We lose 12. But if we're correct and we don't close over 41.10, we win 8. So again, we can see here that how my brain's kind of in real time working to give you guys the breakdown of this event-based contract. So one more time, looking at ES, we can see here that I'm saying that we will not close over 44.10. I'm buying 2 no contracts, but I'm also hedging these 2 with 1 yes contract to kind of balance out my risk portfolio, balance out my risk management. And you can see how it mitigates me from going and losing. If I had just done that straight up, uh, I would have lost 23. But in this case, I only lose 12 because I'm hedging, right? So I'm buying 2 no's, we don't close over 44.10, and I'm buying 1 yes, we do close over 44.10. So you can see this is the beauty of it. You're only playing with 32 bucks, but you're applying the same exact principles of risk and reward, trading style. You're building your trading style. You're also building and revolving around the world of what? Trading stocks, futures, ES, options. You're learning kind of the moves and the basis is here. And you can see already our yes leg went a little bit higher, and our no leg came down a little bit by a few cents. Nothing too crazy, but again, throughout the day, you have the ability to cut a leg if things go wrong. So we had a lot of fun today. We did our market overview. We did some trading with our price action today, and you guys got deep inside my head and in real time saw how I would be working with trade contracts, applying with the hedging. And remember, these are 0 DTEs. So at the end of the day, they're kaput, as in if it's correct, you get your money cash out. It's not like both legs of the contract is by worthless. The leg that is correct, you win 20 per contract. But if the leg that's wrong will expire worthless. But remember, throughout the day, you have the ability to cut your losses. I'm your host, Ryan Rosbiani. Thank you so much for watching. You can follow me on Twitter at Ryan Rosbiani. Make sure you guys subscribe to the page here at TradeEvade. Make sure you hit that like button on this video. Appreciate you all for watching. As always, remember, go to placeyourtrades.com to see everything that we're doing here on the channel, everything we're doing. There's a ton of great shows on this network. There's a ton of brilliant minds that are putting out so much information that I think you guys should be taking advantage of, and it's absolutely free. As always, thank you. I'm your host, Ryan. See you in the next one next week at 11 a.m. Bye-bye.